Hi, everybody. My name is Svitlana, and I came today from United States to talk to you about supply chain financing. I work as a researcher in the United States, and I do the blockchain research. And I'm interested in its impact on emerging markets. I work primarily with UNC University of North Carolina and MIT Massachusetts Institute of Technology. And in those universities, we're very interested in how blockchain can bring trust to existing systems and improve inefficiency on the market. So before I joined the academia, I actually was a banker. I did risk analysis and loan evaluation and conducted lending for 10 years. And what I have to tell you that there is a flaw with existing lending system with small and medium companies. This flaw is then banks cannot trust the financials that small and medium companies bring to the bank. Consequently, if banks cannot trust the financial, it cannot evaluate risk properly, thus cannot conduct the lending. If small and medium company cannot receive lending, it cannot grow. So it seems like a small banking problem, but actually it's not really small. This is a study conducted by Harvard University that shows that strong correlation between the level of economic development in a country and number of small and medium companies in comparison with micro companies and big corporations. To put it simple, in high-income companies, 50% of GDP is generated by small and medium companies, whereas in low-income companies, it's only 17%. And governments and corporations around the world who understand this problem, they try to find solutions and implement new innovative models of financing SME customers. This is one of the examples. It's conducted by Amazon. You guys know Amazon, right? It's a big online, like giant online retail that combines 300 million customers and 5 million suppliers. And Amazon used the data about inventory transactions conducted on its platform and transform it into credit score and conduct lending to SME companies. Actually, this venture was so successful that last year Amazon lended more than $1 billion to small and medium companies just in 1 year using this mechanism. But in order to get a benefit of this mechanism, the company should work within the Amazon's tech ecosystem. And we ask ourselves, how can we democratize this technology? How can we take the benefits of this technology and bring it to emerging markets? How can we use the same inventory management mechanism? And actually, we did it. We created the blockchain protocol that does exactly the same. The blockchain technology is created to implement trust into the existing marketplaces and improve ecosystem of exchange. So it sounds complicated, but I will walk you through the use case that we found particularly interesting, and you will understand it's pretty clear. So we went to 2 countries, Mexico and Ukraine. Both countries have transition economy, and both countries have strong agriculture sector, which is dominated by large corporations. Small and medium companies in those countries cannot obtain enough financing to grow. There is a mechanism that should help them to do this. This mechanism called warehouse receipt financing. So the way how it works is pretty simple. Farmer harvests the crop, brings the crops to the warehouse. Warehouse issues the confirmation of the crops in a document that's called warehouse receipt. Farmer brings the warehouse receipt to the lender, and the lender issue money. It sounds like a very good mechanism that should help small and medium companies, but actually it does not work. It does not work because it's flawed. It's flawed because warehouse receipts in those countries are paper-based documents, and there are frauds associated with the fact that those documents are paper-based. Also, the transition costs are extremely expensive to transfer those documents and verify them. And our idea was to implement blockchain on the top of existing infrastructure and take the information about inventory transactions and move it to the public blockchain, where this information will be locked forever. And interested parties, such as banks, will have access to the information and use it to conduct the risk assessment. So the BVerify protocol is created exactly for this. It's a ledger for creating records, for coordinating transactions and building the history of trust. This is how it works. On the top of the system, we have public blockchain. On the bottom, we have existing warehouse receipt structure. Farmer brings crops to the warehouse, where the transactions is signed using the private key of the farmer, warehouse, and IoT device installed onto the warehouse. Then information about this transaction is moved to the public blockchain, where it's locked. Banks, on the other hand, when it wants to issue the loan, it requests information from the public blockchain, verify the presence of collateral, and place a lien by signing the loan agreement on the blockchain, and issues the money. So this is a very interesting solution that solves three big problems. Number one, it's a fraud associated with paper-based receipt. With this technology, the warehouse receipt will be cryptographically signed and electronic. The second problem is low trust to the custodianship of the warehouse. So the entity responsible for recording information about the ledger is a warehouse, and warehouse can be involved in fraudulent transactions. And banks have no information, online information about what is happening on warehouse, what is happening with the collateral. And with this technology, bank will have online information about the state of the collateral. And moreover, IoT devices, which are already implemented in many warehouses, even in Mexico and in Ukraine, they are not connected to the ledger. Consequently, they cannot provide online information to the lender about state of the grain on the warehouses. The user interface looks pretty friendly. The farmer will use a mobile application, the warehouse will use the desktop application, and this protocol has several unique technology that actually I don't have enough time to talk to you about, but I will mention two of them for those who are interested in blockchain. First of all, it's an open source protocol, meaning that everybody can download it and use and experiment with this. And the second unique characteristic is that we were able to create the new mechanism of transferring ownership of the goods using the cryptographic proofs conducted by designated server that no need to be trusted. To put it simple, this technology resolved the long-standing debates between public and private blockchain, which is pretty interesting for those who work in the blockchain space. Transparency that blockchain brings to the existing ecosystem makes a big difference on all participants. First of all, the farmer, these SME customers, have access to financing now, and by having access to financing, it can grow, and we can close this missing middle that I was talking about, improve the existing economy of developing countries. The lender, on another side, will have low rate of default and will be able to grow the loan portfolio with a lower risk. And the asset-based security market will be more safe and efficient. And the last but not least, this research was finished just a couple of months ago at the MIT. The industry and academic paper were already published together with a pilot kit which contains the open source code and the system architecture. And we're happy to provide any technical support for those who are interested in improving market efficiency and who is willing to experiment with these technologies. Thank you very much for inviting me today.